welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 2nd, 2025, and we're diving into the first quarter earnings report of American International Group, or AIG. Joining us is John, senior analyst from Smart Stock Watch. John, AIG has just released their Q1 2025 earnings. Can you give us a brief overview of the company and the highlights from this report?
Thank you. AIG is a leading global insurance organization providing a wide range of insurance solutions. In their Q1 2025 report, AIG reported strong top-line growth, with net premiums written of $4.5 billion, which is flat year-over-year on a reported basis but shows an 8% increase on a comparable basis. The adjusted after-tax income per diluted share came in at $1.17, slightly above the forecasted EPS of $1.05 by analysts.
Revenue and profitability overview. Let's delve into the revenue and profitability aspects. AIG reported net premiums written of $4.5 billion. How does this compare to their previous performance, and what does it indicate about their market position?
While the net premiums written were flat on a reported basis, they increased by 8% on a comparable basis, which is a positive sign. This growth is driven by a strong performance in their global commercial segment, particularly in North America and international markets. The combined ratio of 95.8% indicates a solid underwriting performance despite the challenges posed by higher catastrophe losses this quarter.
And what about their profitability metrics?
AIG's net income for the quarter was $698 million, with an adjusted EPS of 1.17, which is a slight decrease from the previous year. However, it's important to note that this is above the analyst's forecast of $1.05, showcasing their ability to manage costs effectively and maintain profitability.
Capital management and shareholder returns. John, AIG has been quite active in terms of capital management. Can you elaborate on their strategies and how they are benefiting shareholders?
Absolutely. AIG returned approximately $2.5 billion to shareholders in the first quarter, which includes $2.2 billion in share repurchases and $234 million in dividends. This aggressive capital return strategy is a testament to their strong liquidity position, with a debt-to-total capital ratio of 17.1%. Additionally, the board of directors has approved a 12.5% increase in their quarterly dividend, reflecting confidence in AIG's future earnings potential.
That's impressive. How does this align with their long-term strategic goals?
It aligns well with their disciplined capital management strategy, which aims to enhance shareholder value while maintaining financial flexibility. This approach not only rewards shareholders, but also positions AIG to capitalize on future growth opportunities.
Operational efficiencies and future outlook. Let's talk about operational efficiencies and AIG's future outlook. What are the key operational metrics that stand out to you?
The expense ratio improved to 30.5%, and the accident year combined ratio, as adjusted, was 87.8%, which are both positive indicators of operational efficiency. AIG's parent liquidity stands at $4.9 billion, providing them with significant financial flexibility. Their core operating return on equity is at 7.7%, which, while slightly lower than last year, still reflects a solid performance given the challenging environment.
And what can we expect from AIG moving forward?
AIG is navigating the macroeconomic and geopolitical challenges from a position of strength, thanks to their diversified portfolio and disciplined underwriting. They have set ambitious targets, including achieving a 10% core operating ROE for the full year 2025. With their strategic initiatives and financial flexibility, AIG is well positioned to continue delivering value to shareholders.
Key takeaways. In summary, AIG has delivered a strong performance in the first quarter of 2025, with impressive top-line growth and effective capital management. Their ability to exceed EPS expectations and increase dividends highlights their commitment to shareholder value. John, any final thoughts on AIG's investment prospects?
AIG's strategic initiatives and robust financial position make it an attractive investment, especially for those looking for stability and growth in the insurance sector. Their focus on operational efficiencies and disciplined capital management should continue to drive shareholder value.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AIG's performance in the comments below. Until next time.